Gold hits a 3-week low this Thursday as jobless claims drop a surprising 31,000. We have Jim Wyckoff next. Jim, thanks so much for being with us this Thursday.
Hello, Daniela. Always nice to be with you.
So, Jim, let's look at these jobless claims, some claiming that they're a flawed number, but is it enough to still hurt gold today?
Daniela, we saw the gold market and the silver market extend early sharp losses in the immediate aftermath of the U.S. jobless claims data. And then shortly after that, the Labor Department came out and said that a couple of states had computer problems and did not report their numbers, and that added to the sharp drop in the jobless claims number. Nonetheless, even after that correction came out in the Labor Department, basically implying that those jobless claims, the total number is in error, the gold market held on to its losses that it had gained shortly after the report. What I think we're seeing is we're seeing technical selling pressure. We are seeing unwinding of the safe haven trades that were put on a week and a half ago in anticipation of a U.S. military strike against Syria that now looks very much in doubt. We are also seeing some position evening and likely some selling pressure ahead of next week's FOMC meeting.
Right, and let's look at that now, Jim. A lot of people I've spoken with have said that they're really waiting for the FOMC to decide how they will act. Are you placing a lot of importance on this meeting next week?
Indeed, Daniela, the marketplace overall this week has been squelched ahead of the FOMC data. You know, the sell-off in gold today is an exception, but a lot of the other markets are just on hold ahead of that FOMC meeting that starts next Tuesday and ends next Wednesday afternoon. Yeah, I think what the marketplace is expecting right now is some kind of an announcement from the FOMC in its statement that it will begin so-called tapering of its monthly bond buying program. I think the marketplace is coming to believe that the monthly bond buying may be tapered by beginning with about a $10 billion a month reduction in those bond purchases.
So, Jim, do you think we could see gold move drastically next week following that meeting, or is it being priced in right now?
Daniela, my bias is that we are pricing in some kind of a tapering announcement from the FOMC, and that's why we've seen some selling pressure in gold. I think the surprise to the marketplace would be if the Fed made no mention of any intentions to cut back on its bond buying. That could be a surprise to the marketplace. The other surprise to the marketplace could be a more aggressive nature of the curtailing of monthly bond purchases by a significantly larger amount than, say, $10 billion a month.
Jim, now we know silver is an industrial metal, wouldn't necessarily be affected by the FOMC, but it tends to trend with gold. Is it hurting as well?
Yeah, silver is fickle. Sometimes it acts like a safe haven asset and follows gold. Sometimes it acts like a risk asset and follows the raw commodity sector. Today, the silver market's following gold. I think that my bias is that silver is probably going to do what gold does next week in the wake of the FOMC meeting.
All right, Jim, on that note, let's look at your Wyckoff market rating this week for gold and silver.
Daniela, just today on Thursday, we've seen some strong selling pressure in both gold and silver to push the technical posture on a near-term basis into the bearish camp slightly for both gold and silver. I'm giving both gold and silver a 4.5 Wyckoff's market rating, slightly in the bearish camp. The bears do have near-term downside momentum in both gold and silver. For December gold, we see some stiff overhead resistance at the 1350 level. Now remember, that was support just earlier this week. Now it's resistance. We've got solid technical support at the 1325 level, and we challenged that level as we speak on Thursday. We drop below that level, and we're going to probably see a quick challenge of psychological support at 1300. For silver, we've got overhead chart resistance at $23, solid technical support at 22.
Fantastic, Jim. So it really seems we're just really split down the middle right now.
Yeah, we're biding our time, waiting for the next bit of major fundamental news, and it's very likely going to be with the FOMC meeting next week.
Great, and we'll speak to you right after the FOMC next week. Jim, thanks so much for being with us.
Sounds good, Daniela. Can't wait till next week.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching.